Today's video, I want to talk about risk management, but I haven't really made an outline for this video. So usually I'll go into Google Slides or something like that and have like a presentation ready to go. But in today's video, I kind of wanted to just talk freely and explain as much as I can and go into things that I feel are specifically important. So risk management is going to be the topic of today's video. Obviously, risk management is a very broad thing, and there's a lot of things we could go into specifics about. Also, I know I've covered this topic a lot on my channel, but it's because I really want to emphasize it because it is one of the most important things, and in my opinion, the biggest contributing factor to any trader's profitability. So right away, what I want to start with is obviously I want to talk about the different kinds of risk management, because obviously there's a risk management for every trade you take. Sorry about my handwriting, by the way, especially since I'm doing this with the mouse. It's a little bit janky, but stick with me. So you have risk management overall. Then you have your trade risk management. So every trade you take, there's going to be a certain risk amount you're willing to take when you go into that trade. You're basically saying, I have a general idea of what I think the market's going to do. I'm willing to risk $500 to figure out if I'm right or not. If I'm right, I should make a profit of at least $500. At minimum, you want to have a 1-to-1 risk reward. Preferably, you have something like a 2-to-1 risk reward. But again, it's not always going to be perfect. And it all depends on your strategy. But without a doubt, you should definitely have a defined risk amount per trade. Then you also have a defined risk amount for your trading day. And I'll explain why this is important. But there should be like a max daily stop loss for your account. So let's say per trade you're risking $500. Maybe your max loss on the day might be $2,000, $1,500. You can obviously switch this around and optimize it for you personally. But the reason this one is super important is because it has to do a lot with emotion. And that kind of takes me to my next one, which is emotions. And a lot of people don't consider this at first, but emotions are a huge thing, are a huge part of trading, and they play a big role in our risk management. If you're trading tilted, you can do a lot of damage to yourself in a very short amount of time, and that's usually what leads to blow-ups, because a lot of times people understand risk management on the trading level, but they don't understand risk management in terms of their emotions. It can be the case that, okay, you're going into every trade risking $500, but all of a sudden get into a trade that you had a lot of confidence in and you thought you had a very good game plan, and it goes against you, so now you're down $500, right? Which is not a big deal because it was part of your game plan. All right, so this is a perfect example right here. So this is the low of day previously, before this point, and then we make a new low of day, and then we come back with the pretty strong candle. So let's say you enter calls right around here. So this is your entry point right here on this big green candle right here, and then you put a stop loss, let's say under this candle. That's actually a pretty wide stop loss there, but for this example, let's just say that's your stop loss, right? Let's make this a different color so it doesn't confuse you. All right, so you enter here, trade's working out for you, but then you see this big red candle, but it's still good, hasn't hit your stop loss, so you don't exit the trade. But then we come all the way down here and we break the low of this candle that was initially the breakout point. So you take the L, and going back to our thing, you're down $500. That looks terrible. Maybe this wasn't the best idea. Oh shit. What did I do? Okay, whatever. That's not what I meant to do. So you're okay. It looks basically the same. So that was for no reason. Okay, so you're down $500, and then you see the trade reversed all the way back up and come all the way over here. So then obviously, it comes back to your entry point and breaks this high. So at this point, you're pissed off because you're like, "Well, I just lost $500, and if I would have held." Because basically it hit your stop loss and then it came all the way back up, and now you would be in the green. So at this point you're feeling like, fuck, the market is against me. Just stopped me out, and right as it stopped me out, it bounced all the way back up. What is my luck? All right, so you decide to re-enter the trade. There's a new game plan, and you decide to enter with double the size because you want to make up your losses. So you enter on this green candle here, but you say your stop loss is going to be right here. And I know this doesn't make too much sense because your stop here was a lot wider, so why would your stop be super close? But just stick with me. It's not a perfect example, but just stick with me. So you enter here, and then the same thing happens again. Starts working out immediately while you first get into the trade, but then it comes all the way back down and it stops you out, and then it flies again. Now you're down another $500, and let's say your daily stop loss is 1,500. So technically you have another attempt to go before you're locked out for the day, and you're frustrated as fuck at this point because, okay, you entered here, you got stopped out, and then it had a big huge rip. So at this point you've gotten stopped out twice, whereas if you would have just entered here and held, or what was your first entry? Your first entry was like around here. If you would have just entered there and, you know, held through this loss, you would have been up like $1,000. Instead, you're down $1,000. So you're frustrated and you're like, what the fuck, man? And then just for the sake of this example, let's switch over and say we're this part of the chart is over here. Hopefully that makes sense. So let's say you decide to enter calls here, and then originally you probably would have placed your stop loss like somewhere right there, right? So that's a decent game plan. If it hits this level, you would lose another $500, right? So you enter calls here, it works out initially for you, but it doesn't go up enough to hit your take profit, and it's not enough to make up for the $1,000 that you're down. So you don't end up selling for a profit there. You end up holding, and it comes all the way back down, goes to your stop loss, and you think about selling it, but you're like, all right, it just stopped me out 2 times. Maybe this time I just have to hold, right? If I would have held here, it would have worked out perfectly. So I'm just going to hold. I'm not going to take my stop loss. And then you get positive reinforcement because it starts bouncing from that level. And you start thinking to yourself, see, if I would have stopped out, I would have been screwed. I would have been down another $500. I would have been locked out for the day. And, you know, for you to just come back down and come all the way back up. But then it doesn't repeat the pattern. You know, in these examples, it broke out, came down, and then broke out again. Broke out, came down, and then broke out again. But in this case, it broke out, broke down, never fully recovered, and actually broke down. So at this point, you know, when it tried to bounce but then it's failing, you definitely should have been stopped out. But because at this point you've already taken 2 L's like that, you're below your daily stop loss and you're not taking the loss, you decide to hold. Maybe you even add to your position here to lower your average cost basis. And that's where stuff gets bad, because it just keeps dying and dying and dying and dying. And then eventually when we get new low day, you're like, all right, max pain, I can't take this anymore. And at that point, when you reach max pain, it actually, you get a sense of relief when you exit out of the position, even if it's for a huge loss. And obviously you're still upset, but you feel that sense of relief because you're no longer suffering. But you basically already took all the damage. So, you know, at this point, a loss that should have been only $500 turned into a much bigger loss. But you lost $1,500 on this trade, and if you added, it could have been even a lot worse. So now you've surpassed your daily max loss, and you're down $2,000. And the worst part isn't even this. This isn't the worst part. The worst part is that the emotional state it's gonna leave you at. You know, because now you're in a much bigger hole than you should have been in, and you're frustrated, and you're only susceptible to reliving these same mistakes over and over again, because you suffered so much pain. So at that point you're like, what's the point? And then, you know, you're like, risk management sucks, and you start revenge trading, over trading, sizing way too much, and that's where the real damage begins. But it all started with you know, not having control over your emotions. And like we were saying before, so there's the trade risk management, there's the day risk management, there's the emotional risk management, there's also the performance risk management. And what I mean by this is, obviously I've made a video on this actually, so I really recommend you go check that out if you haven't already. I don't remember what it's called, but I'll have it up on the screen right now. It's going to show up. Go check out that video. But basically, I mentioned that, when you're trading good, let's say this is your P&L curve. When you're uptrending on your P&L and you're having green day after green day, green week after green week, at that point, you're able to afford to size up and go a little bit more aggressive because you're performing well. You're able to read the market better and your overall confidence is higher. So you should be sizing up in periods like this. But then obviously you have the opposites. And at least for me personally, the most key points are inflection points. So let's say this is your P&L curve, right? You have some wins, some losses, and then you get this. Fix that a little bit. So let's say you get this, right? And you see how you were in an uptrend here, exactly like you would look at a stock chart. You have a low here, you have a high here. This right here is higher than this low, so it's considered a higher low, and that trend continues all the way up. This high is higher than this high is higher than this high, this low is higher than this low, etc., etc. But then you reach this inflection point, and just like in a stock chart, that is a very, very key moment. So again, this is your P&L chart. Right when this happens, that's a very crucial moment, because what you do at this point is going to determine whether you give back all your profits, you flatline and eventually find that breakout, or you rebound all the way just straight up. Now, common sense, we would want this, and if you don't have a good hold on your emotional risk management, you're going to want to go for this, and that's going to be your goal. But obviously the safest, the best, and the way to go about it is this way. You have to build that support, because there will be times when you'll be able to bounce right back up from a big sized loss. However, more times than not, you're putting yourself at big risk of causing this. And this is really, really, really painful stuff here. And again, going back to that emotional P&L, always the big downside to having red trades is not necessarily the money you lost, but the emotional damages that it causes, because one big loss can domino effect into several big losses, and that's where the real danger comes in. And so when you have something like this where you start going into drawdown even after really good performance, a lot of times as traders we only see this and we forget about all this. Like, yeah, sure, we took a pretty big hit and it's never gonna feel good. Even if you've been a consistently profitable trader for years and years and you've gone through this, it's never gonna feel easy. It's never gonna be an easy time to go through. Obviously, your confidence gets hit. I've heard huge traders who have made millions upon millions trading and they experience a drawdown. It still makes them feel like, shit, do I even know what I'm doing? Like it could get really dark. It could feel like you don't feel like you're able to recover from this. Depending on the size of it, its impact is going to vary, but every single trader, no matter how good they are, they're going to experience drawdowns. Again, even the most consistent of consistent traders are going to face drawdowns. It happens. It's part of trading. But dealing with that is very, very, very key. So obviously the number one thing to do would be to size down when you enter a drawdown. Size down. And how significant the size down will vary on your experience level, your account size, and all that stuff. But definitely, you're going to want to size down. And number two is zoom out. Because again, a lot of times we get too focused on, all right, I had a green day yesterday. But then you come into the next trading day and you want another green day. Doesn't matter the size of the previous green day, you want more. And that thirst for more is basically impossible to satisfy. And we're always wanting more. Because obviously you want to feel like you're improving. You want to feel like you're performing well and you're getting results out of the hard work you're putting in. However, it is not always going to be the time to see excellent performance like this. The good times don't last forever. There will be periods of some rough times, and whether or not you're able to handle that and weather through that that's what's gonna determine whether or not you make it in this business. Those are the very, very, very crucial times. So how do you get through this? So obviously, first, like I said, you size down. Second, you zoom out and you look at your past performance. I'm sure there will be other periods of times where you've experienced something like this and you've recovered out of it. So you can use that to help your confidence. And the third thing that really has helped me weather through drawdowns is to stick to what works best for you and just keep pushing forward. That's the best advice I can give to you. And what I mean by stick to what works best is, if you've been a consistently profitable trader, if you've been a profitable trader for a while now, and you go into a drawdown, it's easy to want to change your strategies at that point because you lose confidence. It's going to hit anybody's confidence again, no matter how good they are. It's going to hurt their confidence. And a lot of times as traders, at this point, we want to start expanding our playbook, looking at different setups, trading stocks that we don't normally trade. But the thing that's going to really get you out of this is just sticking to what has worked in the past. And obviously there's a bit of nuances to this because sometimes there is actually times where the market has changed and your strategy may not be profitable anymore. And hopefully you have the experience to realize that and you're able to adjust. But for the most part, drawdowns are going to be natural, and you don't necessarily want to start messing with everything, messing with your strategy too much because you feel like it's just stopped working out of the blue. Again, sometimes that will legitimately be the case where your strategy no longer applies, depending on how dependent that strategy was on the market conditions. But if you're a good trader and you've had years of track experience, the most common reason why you're having a drawdown is just simply because it's part of trading and you have to stick to what you're best at. And you have to have that confidence in yourself to just keep on pushing forward. But obviously, you don't want to aim for just the big bounce back. You want to aim for that, okay, let's let our P&L flatline for a little bit. The number one priority at this point is protecting yourself and protecting your gains. Again, the worst thing you want to do at this point is to give back all your gains, because not only will that wipe out weeks or possibly months of gains, it will destroy you emotionally, and that will just lead to more pain and losses. So stick to what works, size down, and look for that flat line and then eventual breakout. And then once you break out, you can start sizing up again and getting more aggressive. But yeah, being protective is very, very key during those points. So we've talked about performance, risk management, trade risk management, day risk management, emotional risk management. Now I want to talk about energy risk management. So this is a new one. I haven't talked too much about this one before, and this was one that I've recently been exploring for personally myself. And this is very key. So energy, what do I mean by energy? So like in anything, let's take a conventional job, right? What do you give up? What is the trade-off? Well, the trade-off is you're giving your time for money. And usually, if you have an hourly rate, 1 hour equals a specific amount of money. Let's say it's $50 per hour. And that looks terrible. Hold up. Again, I apologize for my handwriting. It's not the easiest to write with the mouse. So let's say you're giving up your time for your money, right? Now in trading, that's not the case. Obviously, even if you show up every single day for the full 6 hours, 30 minutes that market is open, that doesn't mean you're going to get paid a certain amount for your work. There's going to be times when you spend 10 hours at your desk and you finish the day down a couple $1,000. And that's some frustrating ass shit, but that's trading for you. But there definitely is a sweet spot in terms of how much energy you're exerting into the market and the performance you will see. So a lot of times, again, because we're so used to this, put in more time equals more money, sometimes we could feel like the more energy we put into trading, the more we should be getting out of it. But there's a certain point where that is the case. So let's say we're making a graph, right? This is the energy you're putting into trading. Actually, would that be right? Let me see. Energy would have to be down here, right? Yeah. It is the case that the more energy, obviously if you're a harder working trader, you put in more time to studying and all that. For the most part, at the very beginning, it is going to be the point where more energy is going to equal more P&L, for the most part. But then it comes to the point where that starts, it starts having the opposite effect. And the key is finding that sweet spot where you're spending a decent amount of time or a decent amount of energy, which energy could also be time, you know. So there is a sweet spot you want to hit where you're gaining a certain amount of energy and you're able to perform the best. So I'm sure you guys have heard of this before, but as humans, we're not meant to be working 24 hours out of the day, or, you know, a majority of the time. It's usually the case that if you have concentrated energy and you really apply yourself for a limited amount of time, that's when you're going to get the best results. You don't get the best results by putting in 15 hours into something. Sure, it might feel like you're getting most of the work done, but in terms of efficiency, there's a sweet spot that comes with it. So I'm sure you guys have heard of a lot of traders saying they only trade the first hour and then they're done. And while I think a lot of people are bullshitting about that, there is some truth to that too, where some very high level traders, they're only able to perform at the absolute highest level for a very limited amount of time. And if they've learned that that's 1 hour, then it makes the most sense for them to only trade 1 hour out of the 6 of the day. And again, a lot of people, especially as newer beginner traders, and for a beginner, I would say you should focus on putting in the most energy, because obviously acquiring that screen time is the most important as a beginner. But this is more for those people that have already reached consistency and they've seen profitability, and they're at that point where, let me make a little bit more sense here with an example. So let's say if you trade 1 to 2 hours out of the day, you're able to make $3,000, right? However, if you were to trade for 6 hours, you have the chance of making $4,000. Now, obviously, 4,000 is greater than 3K. But at this point, you have to spend an additional 4 hours. Are those 4 hours worth it for that $1,000? And again, it's not like those $1,000 are guaranteed. It's just a possibility. So a lot of times, especially if you've been doing this for a long time and you're getting to that point where you're I'm not gonna say like you're what's the word? You're burning out. Okay? If you're at that point where you're like burning out and it's getting to the point where those additional hours would actually have negative effects, does it make sense to go another 4 hours for the possibility? You're not guaranteed this money. As traders, we're never guaranteed money. You always have to put in the work, and obviously there's always risk involved and everything. So does it make sense to spend these extra 4 hours to make an extra $1,000? And maybe for a certain amount of time it does make sense. Maybe you're trying to grow your account to a certain point, so you want to push it a little bit. So maybe it makes sense there. But in the long term, those 4 hours, especially multiplied over time, so in a week, that's an additional 20 hours you have to yourself. In a month, that's an extra 80 hours. And like I said, over time, this is just going to compound and compound. So this is the point where you have to start thinking long term and what's the best long term. So let's go a little bit deeper here, and let's say you decide to trade the full 6 hours and you do that for a long time. Eventually it might be the case that let's say in 2 years you were able to make 5 million. I don't know why I wrote it like that. And this trader only made 4 million. So you made an extra million. Hooray for you. But you spent so much more time than he did. So then it comes to the point where you get burnt out and you have to take 2 months off, which 2 months you got that extra million cushion on him. But then it turns out that that month ends up being a really great month, and this trader is able to perform at a 200% level because he's been conserving his energy. So then during that time when it's time to hit it, he's able to spend 3 hours a day trading, and then in those 2 months he makes an additional 2 M's. So now he's at 6 M, and he spent significantly less time than this person. Right? I don't know if that made sense. Hopefully you guys got something out of that. But yes, really important, energy risk management, something a lot of people don't even consider, but very important. So there's performance risk management, trade risk management, day risk management, emotional risk management, energy risk management. But again, in summary, risk management is king. Protecting your capital and surviving in this game is your number one priority. And that doesn't just entail, how much am I risking per trade? Sure, that's extremely important. But there's other avenues of risk management that are also as important, if not even more important than that. Because like we said in those earlier examples, you can have a certain amount you're risking per trade, but if you don't manage your emotional, it's going to cost you. So yeah, let me know if you guys like this type of format video where I don't necessarily have it all planned out before. I don't have that Google Slides ready to go. I just hit the record button and speak and give you guys some of the knowledge I've acquired over the years as a trader. So I hope you guys enjoyed that. If you guys want to see more of these type of videos, let me know and I'll be sure to do that. If not, I'll go back to the conventional, create Google slide thing and make the video a little bit more organized and all that good stuff. But yeah, thank you so much for watching the video. Hope you guys have been crushing it in the markets. Really quickly want to give a shout out to Internet Accelerator. It's a really great trading group with a lot of really smart and knowledgeable people in there. And we currently have a promotion going on where you get a 7-day free trial if you sign up today using my link in the description down below. Really recommend it. Again, there's no cost to you, no risk. You can join for 7 days, try it out. If it's not for you, all good. Just make sure you cancel it before the 7 days is up and you're no cost to you, right? You just got to try it out. So really, I don't see why you wouldn't join up. And if you do join up in those 7 days, I'm pretty sure you'll find some value in there. So if you decide to join the team after that, I think the cost is pretty low compared to the value that's being provided. We have a lot of talented people in there, a lot of traders in there. Again, we don't only have stock specific stuff, but I'm mainly in there for the stock stuff, so that's what I know. There's also other stuff, like we recently added real estate into there. There's obviously crypto stuff, NFT stuff, e-commerce stuff, marketing, and just I think personally the most value you're gonna get is the network you're able to build with other people that are established in every one of those scenes I talked about. So I feel like that's where the big value comes from. And then obviously you have Luca Nets doing those weekly calls, lots of knowledge dropped in those, and it's basically like a Q&A format. So if there's anything you're interested in, you can just ask him and you get feedback from someone who's made tons of money across a lot of different areas, trading, e-commerce, building brands, NFTs with Pudgy Penguins, whatever you name it. He's got experience in a lot of fields, so definitely worth checking it out. Like I said, you get 7 days to try it out. You can probably make the monthly payment within those 7 days. I saw somebody that on his first day he made like 5K trading, which is insane. So again, lots of value in there. Definitely recommend to check it out. And if you use my link, you get access to that 7-day free trial, like I mentioned. So make sure to go do that real quick. But other than that, I'm gonna end the video there. Thank you so much for watching the video. If you guys enjoyed, leave a like, and other than that, I'll catch you guys in the next one. It's been me, Zero, and I'm out. Peace.